It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian stocks dropping after a sell-off in U.S. chip stocks, fueling concerns over the durability of the AI rally. Treasuries reversing gains following dovish comments from Fed Chair Kevin Warsh.
Apple seeks the U.S. government's blessing to buy Chinese memory chips as it grapples with a global shortage that has forced it to raise prices.
Now, the SEC opens an investigation into Susquehanna's allegations that insider traders made around $100 million ahead of a Chinese regulatory crackdown.
And Hong Kong set to reopen from a midweek break, with traders looking for fresh catalysts to prop up the world's worst performing major market. Alibaba, Tencent, and Baidu all gaining in the U.S. session. He's back. It's been a while.
I know.
What did you miss? I mean,
week and a half?
Yeah.
I haven't been away from work for this long.
He's been missing it. He's like, I'm bored. Yeah. I need to come back.
Well, we've been chatting every day, so I've been updated with news and other stuff.
Yeah, I mean, there's a lot to talk about.
What did I miss? Yes.
I mean, there's a lot to talk about, right? You know, obviously, we have Kevin Warsh in Sintra, and I think it was, relatively speaking, pretty dovish.
Okay.
So that actually helped in some ways. But then again, we're talking about, once again, a lot of volatility in Korea. And what we're seeing in the Kospi here right now, I think this meta news, the fact that they're potentially renting out excess capacity in the whole computing world is sort of roiling a lot of the picks and shovels trade here this morning.
Yeah, they're taking out insurance just in case the capex that they put in and are planning to put in might be a little bit too much. We're down about 1.7% across the Asia Pacific. We talked about, of course, Kevin Warsh. In fact, why don't we have a listen to what he had to say and perhaps why we are seeing the dollar slightly off highs today, although we can put the dollar in context later. But let's have a listen to what he had to say overnight.
We're taking seriously the reform objective, and we're going to deliver on the high promise that Congress gave us to deliver price stability in the context of our dual mandate. And when we do that, we don't have to worry about politics. We don't have to worry about judicial intervention. We get to look in front of us because it's a challenging step.
So, yeah, delivering that price stability, that's kind of what he said in the last meeting. But, what I think what Marc really liked to hear was he mentioned about price risks have come down in recent weeks.
Yes.
So it seems like the inflation picture is looking a little bit better. Obviously, with the oil price, that certainly is helping things. So I think that was what we really got out of it. But we'll see what the jobs report brings us later on today, too.
Yeah, we're looking at that. 200,000, I believe, is the estimate from Bloomberg Economics. You get 3-month average closer to 200,000. I think Citadel, you guys were talking about this yesterday, right? Is the market underpricing the possibility, tail risk of a move in July?
Yeah.
Just something to consider, of course, as we go into this specific payroll support against the backdrop of perhaps inflation slowing down. In fact, just on this very note, let's have a look at where we are in the U.S. dollar. 2-day look, we were at session highs right before Warsh spoke. And, of course, you do see, of course, the move in the dollar following that commentary that's come through, and why we are trading at about 12.24 right now on the Bloomberg Dollar Index. There you go, 2-day look at the U.S. dollar. We're creeping back a little bit, so we're splitting the difference. Let's call it the midpoint of that gap between the highs and the low overnight. Coming into the session today, let's have a look at where we are in the key currencies, right? Dollar yen, dollar won, which has been, of course, trading at extremely weak levels there on the South Korean currency. The other story, of course, is where we are in oil prices. And yes, in case you missed it and I missed it, I came in this morning and oil was, there we go, closing in on a 60 handle for the very first time in several months. The equity story is this. Perhaps you can't ignore U.S. futures. Focus on what's happening here in the Asia Pacific with the Kospi index down 6% as we speak. And, of course, Hong Kong opens up. It's not as if we had some upside momentum to talk about, but yes, we are opening up against the backdrop of some tailwinds, some headwinds across these markets. Dollar China, yes, we are back to that 680 handle thereabouts on dollar offshore. Okay, let's get a context now from Anthony Stephens, our markets reporter here, to tell us about why we're seeing these cracks in the tech space today.
So the Meta announcement is comes at an interesting juncture, right? We have these huge investments in capex that have been helping the Asian trade. So Asia has two of the best markets in the world on the year, Taiwan and Korea, right? Korea is almost up around 100%. Now it's 97%. That market has seen a torrent of foreign profit taking, $95 billion year to date. And then Meta announces that they would be thinking about renting out this spare compute. And the market asks, what's spare compute? I thought you needed everything, right? And that is the change in narrative. So that's why NeoCloud got hit so hard, that all the picks and shovels, as you mentioned, got hit so hard. And this comes at a really kind of precarious juncture for Korea as Apple starts to push back on the DRAM side of things and looks for kind of diversification from the Chinese players. So those two forces are coming together now to put pressure on this memory trade, just as the Korean memory makers have embarked on an epic capex spree. So the market is kind of concerned, have they overspent at the top of the market? Now, it really has to be mentioned that in the near term, no one's cash flow changes whatsoever, right? They still have very strong order books. It's the same for the hyperscalers in the US. They continue to spend on compute. But at the frontier of this trade, there are concerns now. What does the forward-looking picture look like? Because the 2027, 2028 picture is so clear, but now we're discounting out much further into the future. And Taiwan will be very interesting to see the damage underneath TSMC, all these picks and shovel trades, how they trade today as well.
And it seems like we've been talking about rotation for weeks now, right? When you talk about where this AI rally, first it was the hyperscalers. We haven't seen a mega cap tech in the U.S. actually play a part in this rally for a few quarters now. It kind of rotated to precious metals, commodities, and then chips. Now that chips seems to be seeing a bit of profit taking, does it seem like it's the end of the cycle to you in some ways?
You hit on the biggest risk to Asia at the beginning is US hyperscalers, right? US hyperscalers have lagged the whole way through. Meta being the greatest example, actually, right? And the fact that it popped 9%.
Look at NVIDIA. NVIDIA's not even, it's been re-rated down. Yeah.
It's a big risk to Asia, because if those companies start to kind of be more careful on their cash flow, investors will reward them, and you will see the increase in share price. But it will come at the expense of the capex spending that we receive here in Korea and Taiwan. China is an edge case, and that's why we probably saw a bit of relief from K-Web yesterday overnight. China is a software spender on hyperscaling, so it will be very interesting to see whether the Chinese benefit from this rationality paradigm that's coming. Now, we have to look at the cost of compute has gone up so much, right? Yeah. That is something that whether there can be any cost discipline possible to kind of arrest that development, that is what the market's looking for right now.
Anthony, thank you. Anthony Stevens there, our markets reporter on the latest on all things tech. Let's stick to tech here, because the story from Apple said to be in negotiations to buy chips from two Chinese companies on a Pentagon blacklist. Now, it's trying to reduce the impact of a global memory shortage that's forced it to raise prices across its product line. More, let's bring in our China correspondent, Min Lo, joining us now. It seems it's interesting, right? This was following up on the FT story that came out a few days ago. But I mean, Apple has always been able to get access to all these chips, just to clarify. But there was a concern that they might get backlash from it. Is that what's going on here?
Yes, that's right. Because these two companies, they are blacklisted by the Pentagon. And all that does is it prevents the Defense Department from buying from these companies. But it doesn't prevent a private company like Apple from doing so. But one of these two companies, Yangtze Memory Technology, is also on a different list, which is the Commerce Department Entity List. That's different from the Pentagon list. And this prevents U.S. companies from selling or transferring technology to Yangtze Memory Technology. But the thing here is that Apple is not selling to Yangtze, it's buying from Yangtze. So technically, it is not violating any U.S. export control rules. It doesn't need to seek U.S. permission, but I think there is still a lot of scrutiny right amid this, trying to reduce reliance on Chinese suppliers. So Apple is sort of preempting that, and that's why Tim Cook, the CEO, has been in talks with Scott Bessent, the Treasury Secretary. This is according to sources. And Apple is said to be looking to use these chips only for those handsets that they will sell in China in order to prevent any backlash from U.S. lawmakers.
But who are the current suppliers, and how bad is the squeeze, actually?
The current suppliers are the big three, which are Micron, SK Hynix, and Samsung. But the problem with these three is that they have been cutting the production of DRAM and NAND chips. That's the storage and the memory chips, because they're shifting to the HBM chips for the data centers, because that's a lot more lucrative. And so that supply constraint has already pushed up prices of Apple products, right, by about $100 to $500 a piece. And the supply constraint is likely to continue, because even though SK Hynix and Samsung, they're looking to build two more new plants each, is going to take time to come online, and that's why Apple is looking to add two more suppliers to their list now.
Some news on ByteDance as well. They're looking to build one of the largest data centers outside of China in Brazil. What more do we know?
Yeah, it's an interesting choice, right? And it does seem like Brazil is becoming this up-and-coming data center hub, which some analysts are expecting that its data center capacity could quadruple by early 2030. So ByteDance is one of them that is investing to build this data center that would be operationally ready by late next year. They're looking at a 200 megawatt computing capacity, and that could eventually go up to 1 gigawatt. And then we're also hearing that Alibaba is also separately planning to rent space in a new cluster of data center in Sao Paulo as well. And that's mainly because Brazil has very, abundant access to renewable energy. 90% come from solar, wind, or hydropower. And of course, China and Brazil has very close ties. China is the largest trading partner, the largest overseas investor as well. So there are all these data center operators in Brazil, some of them backed by U.S. money, and they're courting the Chinese as well as the U.S. hyperscalers. But we're hearing that the U.S. hyperscalers like Amazon, Google, they're not so keen for now just because of, the worry that Brazil could be caught in the crosshairs of any U.S.-China tension. Yeah, especially because Trump views South America as pretty much its backyard in some ways.
There we go, the neighborhood. Min, thank you so much. Min, lower China correspondent there. Just ahead here in shows, we get the outlook for Chinese markets as we go into the second half of the year with UBS Global Wealth. Yvonne explains how they are navigating the softer macro backdrop and, frankly, the lack of fresh catalysts, and why perhaps the Hang Seng Index is really one of the worst performers globally. Year to date, counting down to the open of trade, Shanghai, Shenzhen, and speaking of the reopen here in Hong Kong. Good morning. This is The China Show.
All right, we've been tracking this developing story out of Susquehanna. Now, Bloomberg's been told that the SEC is now looking into Susquehanna's allegations of insider trades that cost it more than $70 million. The market-making firm says unknown traders acted on non-public information about the recent Chinese crackdown on cross-border brokerages.
Yep, Stephen Engel, our Chief North Asia correspondent, is with us right now to fill in the gaps here, Steve. What do we know?
Well, we do know that the SEC is going to pick this up or has already picked up this investigation. We don't know the scope, the size, or how far they've gone into this investigation. Of course, we found out Monday, when this really all came public, that Manhattan federal judge has granted certain requests by Susquehanna, and including the ability to subpoena to try and find out who these unknown, at this time, alleged insider traders. The lawsuit basically names 100 John Doe defendants in this case. So the SEC probing, obviously, because the two Chinese brokerages and also IBKR, Interactive brokerages, which allegedly facilitated these, insider trades, just ahead of that big regulatory crackdown by Chinese regulators on the likes of Futu, Up Fintech, which runs the Tiger brokerage just across the border here, but also IBKR Interactive brokerages. They're all NASDAQ listed. And also, of course, after that May 22nd crackdown, we saw Up Fintech Holdings down 25%. You saw Futu falling 27.5%. So that's where the gains were made. And in this lawsuit, Susquehanna is essentially alleging that who tipped them off, right? Mm-hmm. Were they Chinese insiders in the Chinese regulatory bodies, or possibly insiders inside Futu and Tiger brokerages? We don't know yet. So the SEC clearly has said it is investigating. How far it will go, it doesn't necessarily mean they will take any action, but at least they are investigating it.
Yeah. What comes next in all of this, right? Yeah. It seems like this probe, or at least all we'll be talking about with this cross-border curbs, it seems to be we're seeing more instances of this now, and that's breaking out. Yeah,
absolutely. When you saw these kind of gains, right? So it was the allegations that these traders spent $12 million on these options. They made a profit of at least $100 million. So we need more clarity on that, and also whether this subpoena will be able to allow Susquehanna, and then if there's prosecutors involved, whether they get the names of these people and what kind of crackdown will happen on these insider traders, whether these brokerages were complicit as well. These are all allegations at this point. Yeah. So I think the SEC probe opens it up for a lengthy story.
Okay.
Steve, yeah, thank you. Stephen Engel there, our Chief North Asia correspondent here. So in about just under 3 minutes from now, we should be getting the pre-markets. Futures are doing this ahead of the reopen here in Hong Kong. We're lower a little bit, let's call it 0.1% there. Dollar China on the stronger side of the cutoff, but it's been on the weaker side of the recent range. Let's bring in our next guest, Eva Lee, our head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Eva, good morning. Happy second half of the year. We're 2 days in.
Yep.
Does anything change from the first half is my question.
Well, I have to say that in second half, a number of the sectors will be facing a much easier base. Because,
that's not a good starting point.
More or less.
Yeah.
Fundamentally, we always believe that earnings revision will be always a key driver, no matter whereabout that you are talking about, right? So China earnings revisions, particular those platform companies, the internet portals, they were on negative revision. Even in second quarter, people thought that we are seeing the end of negative by April or so, but it actually continued because they have been spending more money, and that dragged the earnings because all these AI capex was on the P&L, right? So moving into second half, I'm not saying they stop spending; they still will be spending, but. Remember last year, they have made a lot of subsidies on the deliveries. So that will be fading away. They're no longer doing so. So with the AI and then the monetization, as one of the leading companies, they're saying the monetization will improve a lot in second half. DeepSeek also mentioned about the token. They're lifting the token charges during peak hours. So a number of these factors would help or support potentially the positive revision, and that will be a driver for the H share market. But overall tech, we prefer the hardware, the AI supply chain, the semi-caps over that of the internet portals at this stage.
What about the valuations of those?
Well,
a lot of them have been pretty elevated of late. Should I just forget that, the valuation for these companies?
Well, I think we need to, obviously stock picks is important, but we also need to think about the earnings growth. If you look at the sector as a whole, like hardware sector, earnings growth is around 40-45%. Some of them, I know they're trading at 100 times forward PE. Avoid those, but there are some of them, if you're thinking about forward PE, 60, 50, 60. So if you sort of divide that by 40% earnings growth, you're talking about 1.3 to 1.5 times PEGA. So not too ridiculous in terms of valuation.
Okay. But how visible are those earnings, though?
Because these are hardware and these are semis, so they usually have order flow already lock in at least ahead of 6-9 months or even 12 months ahead.
But I could say the same about Korea. They've locked in 2 years ahead, but you run into valuation concerns even with that kind of visibility.
True, agree. But if you think about Korea, they are much higher valuation. Right, I'm talking about more than 100, three-digit type of valuation. So I think, as I said, sector picks, stock picks is rather important. Yeah.
We talk about this divide between onshore and offshore, right? Which it seems like it's just so pronounced in China. What if I were to have to bet on something to narrow this convergence to happen? What would spark? What's the catalyst that's going to change anything in the trajectory? Is it AI enthusiasm has to cool down? Do I have to hear about more demand-driven stimulus from the government to help at least the consumer sector recover? What do you think are the potential catalysts that could change the trajectory of these markets now?
Well, because there are a few moving factors at the moment that, I mentioned about the outbound investments. So more of these money will be trapped within the Asian market. So that will also help the valuation. We did see people putting money into work, either insurance or investments. I think roughly 20-30% of the mature deposit now put to work. So that will help Asia. Because considering the only way that they can invest in H is through Connect program. Right. So that it's going to do well. But compared to pre-May 22nd, I think the Asia will continue to outperform H. When we will see a tipping point, I think last night when I look at some of the U.S. hyperscaler, we start to see the money coming back to the Max 6, right? So I don't know whether that will also help to push people revisit some of these leading hyperscaler listed in H. So that might help to narrow. It's not narrowing the gap, at least lifting some of these top China hyperscaler to do better. Because at the moment they're very depressed in terms of valuation.
Yeah.
Okay, Eva will be staying, of course, with us, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Let's have a look at the approach as we go into the reopen today. Just still at 7 minutes away. Hang Seng Index, last we checked, there we go. We are called higher. That's against the backdrop of quite a serious sell-up we're seeing elsewhere here in the region. The opening bell 7 minutes away. This is the China Show.
Your agenda for Greater China today, of course, we're watching that reopen in Hong Kong markets after that holiday and watching that 23,000 level for the HSI pretty closely here today. Turnover is certainly one thing to watch. We did see China turnover topped 3.6 trillion yesterday, so we'll see. Apple also, the news about them seeking to buy CXMT and some of these Chinese-made memory chips, certainly we'll see what happens with the Apple supply chain today. But yes, chips we're already seeing quite a big drop here today, Dave.
Yeah, we're seeing quite a bit of that. In fact, when you look at the benchmark itself, that should have some influence on the overall level of the tide today. The benchmarks going into the session today, the reopen, keep that in mind. And 23,000, Yvonne just mentioned that. I think we're just slightly above that current level. Can we have a look at that, please, if we can? Hang Seng Index, there we go. 71 points north of that. Hang Seng Tech, 4,500s. Hang Seng Tech, rather. Let's have a look year to date. Okay, so we are going into the second half of this year. The worst performing major benchmark this year, Hang Seng Index. There we go, 10% year to date. If you think this is bad, just look at Indonesia and you'll feel much better about this. Stocks to watch, you mentioned chips, and that's doing not doing too well.
Yeah, I mean, it's really kind of been the meta story that's kind of roiling this whole trade here, just given the fact that they are going to be potentially renting out excess capacity or compute there, which really could add to more competition when it comes to that cloud sort of space. But yes, you are seeing SMIC lower by about 6% here this morning. We got the open. Coming up next, this is Bloomberg.
Good morning. We're going into the reopen today here in Hong Kong. Just a quick pivot to the World Cup update. So Belgium managing to edge out Senegal too late, plus I think a penalty in the 120th minute. England also doing the same, coming back thanks to Harry, not Maguire, Harry Kane. Halftime right now, U.S. against Bosnia. Herzegovina 1-0, of course. No, actually, we're at 62nd minute right now, so still 1-0.
Yeah, I like the little update that you gave there. Take a look when it comes to...
Nothing else to say. I've been away for too long. This has been my world for about a week.
Clearly, you've been watching the World Cup while you've been gone, David. Yeah. Okay, let's take a look at these markets here right now. Hong Kong coming back from that holiday. Mainland markets, though, are doing this here right now. Of course, on the back of what we've been seeing. So we talked about chips. Certainly is getting smashed here today. And you're seeing that with Capricorn Tech. There you go. 5% losses there right now for the company. The meta news, as we talked about, is what really is driving a lot of the worries when it comes to that, picks and shovels sort of infrastructure sort of side of things. So certainly that's what's leading the charge here. And you're seeing the Chinex seeing quite a bit of losses there, 3% down at the get-go. CSI 300 is getting closer, or sub 4,900 here right now for that gauge as well. In terms of what else we're watching out for, Shanghai crude seems to be still cooling, as we talked about with oil prices getting closer to a $60 handle there. So certainly that helps. But then again, it's still talking about the roiling of the sort sort of AI trade here this morning. Let's bring in Hong Kong. Seems like we're coming back with a bit of a catch-up story after that long break. Not long, it was just one day. HS Tech is up 1% here right now. Driven likes by Alibaba, Tencent, Meituan, Baidu. They're all seeing substantial gains here. So, are the skies finally clearing for HS Tech in the second half is the clear question here now that we have seen a lot more rotation potentially out of the whole memory space, right? So there you go. MSCI China is at 0.9%. Hang Seng getting close, well, above that 23,000 level here right now. In terms of movers, we talked about the chips, right? Let's see how the rest of the industry is looking like here. Ooh, double-digit losses here when it comes to some of these chip names. Obviously, there's the Apple story as well, which we have also following here with them trying to seek approval from the U.S. when it comes to using these sort of Chinese-made chips, right, like CXMT, for example. We are seeing some of these chips stocks falling, but I think it's more about the Meta story than on the Apple story per se. Take a look when it comes to, of course, the CXMT, YMTC-related stocks as well. We're watching that very closely. Yeah, still seeing declines there for the most part. Car makers as well. So we had some pretty good numbers coming through from the likes of BYD when it came to those 3 months through June. So 557,090 battery electric models were delivered there for BYD. So set to once again reclaim the title of the world's top seller of fully electric cars from Tesla once again here. So we're seeing 6% gains for BYD. Most of the EV names also delivered with some pretty solid numbers as well. And we're watching JL Mag Rare Earths. This is the A&H shares. Their earnings did come out. Did see when it came to the first half prelim income there looking pretty good. The stock is higher this morning.
Yeah, 31 to 51% is the early guidance there coming through out of the company. Still with us here to have a look at the second half of this year. Plus, let's bake in the macro in terms of what the Fed does and the Chinese macro overlays as well. Eva Lee still with us as well. Let's have a look at the dollar. We'll bring it up. The context right now is a resurgent U.S. dollar. We're now thinking about not so much if the Fed hikes, but how much they're able to hike. How does this play into your strategy, the dollar pushing highs?
Well, I mean, definitely because of the expectation from cut to hike, the U.S. dollar has strengthened against the other currency, in particular Japanese yen, because of the carry. Right. But our house view is, okay, we're not expecting a hike this year, but we do expect a cut in next year, 2 cuts, 50 basis points. So we are, advising investors is, okay, yes, near term, probably U.S. dollar will still strengthen, well, not strengthen further, but at least hold up. But moving into next year, because of this, because all the other currencies already have hike if they need to. So in a way that if U.S. were to cut and maybe other currency even match or not matching, U.S. dollar would soften a little. That was, well, going back to the, I'm not saying that we're going back to the de-dollarization trend, but at least the strengthening, you got to be cautious that it could reverse in 2027.
I see.
The Chinese currency has been solid, though. Can we expect further appreciation, or are things going to slow down from here?
I think Chinese government doesn't want to see too much of a strengthening of its currency. So it's quite managed. So what we expect maybe another 1 or 2% sort of strengthening of the CNY versus USD, but not too much. And plus, of course, the reason is the export have been very strong. And that actually support the K-shaped development. Consumption was really weak. Export sector, relating sectors were very strong.
People talk about the weak demand locally, domestically in China.
Yes.
So then people then talk about, okay, well, that's weak. You have a lot of these Chinese corporates going outside and building, BYD, for example. We just talked about that. Why hasn't that shown up in earnings revisions?
I use EVs as an example.
Sure.
So when even the leading companies, the percentage of earnings from overseas is just starting to moving up. We're talking about some of them are in the 10s, 15%. The leading ones, I think, close to 20, 30%. So the remaining 70 and 90, they're still under the pressure of margin. Let alone also the chip prices also moving up. So that could also tighten the margin further. So the involution really affects these consumption sector. In a way, when you think about, the EVs prices in China is so attractive compared to the international market. But within China, there is still, because of the competition, there's still pricing pressure for the EVs. So I think that is the reason that you got a growth area, but you got a drag as well. So that's why if you look at the entire EV sector, it has not done well, despite the fact that if you come in the second quarter result, I bet all the attention will be on the export growth. Some of the companies just started to go overseas. Their numbers would look really nice.
What kind of guidance do you think we'll hear from Chinese corporates as we enter this earnings season?
They will try to divert market attention onto the export. and in fact, this will be the growth driver.
Which it is.
Yeah, because if you look at domestic market, penetration is already 50-ish%. How much more are you going to gain from it? And then they probably have no hope of lifting prices. I mean, it's best if they can keep the current prices at par.
Everyone's looking at the Politburo in July as potential, maybe some action could be taken. I don't know. What are your expectations? Because given the exports are still so strong with this AI boom, does it only just delay further stimulus?
I think they would still advocate about the support on innovation, which they already done. We had a very weak May retail sales. From the anecdotal evidence, looks like June is not a nice number. So as a result, there might be some support onto domestic consumption, but I don't think it's something like very significant that could move the domestic market.
So let's focus on industrial policy. I think retroactively, if you traded on industrial policy, you would have done better than the index. What are the more consistent themes that you think will deliver performance in markets, looking at policy priorities in China?
Well, I think it's still the innovations, the cost efficiency of a lot of these manufacturing firms in China, which, like when I, 2 weeks ago, I went and visited a few of the companies.
Oh, okay.
They basically, like, obviously the share price did not do well. And they're very cautious in terms of cost control because of the involution. They're very cautious of how to, on one hand, control costs to give you nice margins. On the other hand, they're also very active in shareholder management, buyback and all that. So I think I am seeing a meeting with a group of corporates. They're really cautious of what the market is expecting, and they are trying their best to deliver. So in the current difficult market, yes, you might write off them. But eventually, when the market come back, like consumption eventually come back, they would fly because they already done what they need to in terms of, managing the company.
Okay. Anything else we missed? I mean, beyond just AI, what are some of the themes that you're still going to be tracking for the rest of the year?
I think power resources have been very weak, particular resources. But we do know that, these sort of energy resilience, they will not be gone after the, crisis, right? People will still continue to build the renewable energy sector. They will, the EVs and everything. So as a result, I think this sector looks interesting, maybe on a medium to longer term. I mean, we are looking at the chips have been correcting. So people may start to look back and say, what are the more resilient part of AI? Data center, power supporting data center, power to support the data center. These are valuation talking about teens for PER. Looks very interesting to me.
Eva, it's great to have you here this hour. Eva Lee, head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. Coming up on the China Show, Citi's head of banking for Japan, North Asia, and Australia gives us an update on their business and why they see clients more focused on China than ever before. Marc Luet joins us exclusively later. This is Bloomberg.
Right, welcome back. Let's have a look at iron ore. I mean, Fortescue on your screens, the underpinning of the story. You have Chinese state-backed buyer, China Mineral Resources Group. CMRG is, well, said to be restricting Fortescue iron ore inventories held at Chinese ports as it seeks greater pricing power in key metals. Our Bloomberg Metals and Mining reporter, Paul-Alain Hunt, is with us right now to talk us through what we know about this. It's a fairly nuanced story. So, Paul, just take us through the details here. What do we know?
So CMRG is flexing its power once again. It's told its steel mill members to take delivery of a product of iron ore from Fortescue called Super Special Fines before July 15. After then, there may be a ban on some of those cargoes of the super special fines, and that's raised concerns that there could be shortages in the future, in the futures market for these steel mills, and that's boosted iron ore back above about $100 a tonne. So we are seeing iron ore prices sort of surge at the moment. There are concerns that this is a broader implication on the negotiations between CMRG and Fortescue over their future sort of sales contracts. Obviously, we did see that BHP managed to resolve its issue that dragged on for months and months in negotiations. Fortescue is very much still in negotiations, and CMRG, as I said, is flexing its muscles.
Yeah, it seems like this has been going on for a while, Paul, these negotiations. What has been Fortescue's strategy?
Quite interesting because it's been very different from BHP's. BHP's strategy was, to take a very hard stance, while Fortescue has sort of really embraced China and tried to win over by using, say, renminbi in its loans. It took out, $2 billion worth of loans in renminbi, so really focusing on currency there. It's also bought billions of dollars worth of equipment from China fairly recently. All of these have been part of its strategy to win over CMRG and China. However, it appears that perhaps that hasn't worked as well as Fortescue would have hoped. BHP, like I said, managed to negotiate its sales contract that ended fairly recently. There are others that are still negotiating with CMRG, so that includes Vale and it includes Rio Tinto as well.
So just more context, perhaps, for the benefit of our viewers who might not be too familiar with how the market works. What power or mandate does CMRG have over this specific part of the metals market?
Incredibly important. You're right, David. Look, CMRG was established in July 2022. Its mandate was to ensure that steel mills had affordable iron ore pricing. They have pushed for, like I said, renminbi to be used more often in transactions, and also to establish new pricing mechanisms. Now, this sounds a bit complicated, but generally speaking, the iron ore market has always used, say, the Platts benchmark for iron ore pricing. CMRG is pushing iron ore miners to negotiate with prices based off other benchmarks. So while it sounds quite complicated, it's all about giving China and CMRG and its steel mills better terms and better influence across the iron ore market. Some are worried that this could just be the start and that we could see this replicated across other metals, but obviously it remains to be seen there.
Paul, thank you. Paul-Alain Hunt there, our metals and mining reporter, joining us out of Melbourne on this story. But yeah, certainly one that did move markets yesterday. Look at how Asian markets are doing as we head to that commercial break. And really, we've been tracking, of course, really the North Asia side of things has continued to see quite a bit of pain here. Greater China is looking like this. So a catch-up trade that's going on with the Hang Seng Asia's tech there. And you are seeing that rotation where it's really H over A here with CSI 300 lower by 2%. This is Bloomberg. All right, we are seeing Asian markets seeing the sell-off here getting a little bit more painful. Kospi is lower. Well, actually, we come off some of the lows, actually. Yeah. We're down about 2.5%. We were as low as 5 earlier for the Kospi. But it really is the tech space that continues to be roiled here today. Even the infotech gauge is down some 3%. So certainly a lot of questions about where we are in this whole AI cycle. Now that even when you see the likes of chips are also getting hammered here on the back of that Meta story, too.
Yeah, any early whiff that the CapEx
bubble
spend has been maybe a little bit too much CapEx and maybe we don't need that much currently. It's really weighing on it. And that really brings us to this fantastic report coming out of Bloomberg Economics. When you talk about, while the potential of AI is enormous, the profits might not actually materialize in time to really appease what we all know is very fickle and short-sighted markets, the patience of investors, certainly. So what BE has done is they've modeled what a popping of the AI bubble might actually look like. And under this scenario, the global economy could take a hit of about this much, $1.6 trillion in the first year of that potential scenario playing out.
And you wonder which economies are going to get hit the hardest, right? Once that bubble pops. The worst affected would be the likes of Taiwan and South Korea, no surprise. China would also take a smaller but still significant hit on this sentiment souring. Let's bring in, of course, our Bloomberg Korea economist, Hyo-sung Kwon. He joins us now. Just tell us a bit more about that number, right? How big would the economic impact be if this AI bubble bursts?
That impact would be significant. But not like a 2008 style financial system meltdown, but more like 2000 dot-com bubble bust. So we assume a 20% correction in U.S. equity prices and a pullback in AI infrastructure investment in the U.S. The combination of those shocks would put U.S. economy at the edge of recession, and GDP growth would drop by 1.5% over a year. With a couple of quarter of contraction. And as you mentioned that globally, the cost to be 1.3% of global GDP. That's $1.6 trillion and equivalent to the size of the Switzerland economy. The drop in investment and weaker consumption will weigh on the economy, but the financial conditions, tighter financial conditions through wider credit spread will be more damaging.
So I think we've laid out some economies here that, in a scenario where this plays out, this is the effect. Can you talk to us about the why? What assumptions are you making around these economies and why they're especially sensitive if and when this happens?
That as you mentioned that Taiwan and South Korea two most vulnerable economies, simply because those two economies are highly embedded in AI supply chain through semiconductors. Taiwan is most exposed. Think about Taiwan economy grew almost 9% last year, and I expect the economy to grow more than 9% this year. The main driver is, of course, the AI boom, and TSMC sits at the center. And for South Korea, it's a little bit more diversified, but think about Samsung Electronics and SK Hynix. The combined operating profit it's likely to amount to almost 20% of South Korea's GDP this year. That's a lot. And if AI capex slows down, then it directly hit both countries' exports, production, investment, and tax revenues. So according to our model, then Taiwan would cost to be 4%, more than 4% of GDP. South Korea a little bit more diversified, still around more than 2.5%, 2% of GDP would be at risk.
Yeah, so there is this debate about whether these economies are relying too much on just one thing, which is AI. What is the prescription for policymakers then? What should they do?
Yeah, as you mentioned that, it's too much concentration on one sector. So for policymakers, I think diversification it's become increasingly important. So AI has been tremendously positive, but relying too heavily on one technology cycle create the vulnerability. So the policymakers should aim to secure the economy that would be supported by a broader range of industries to make the economy more resilient.
Okay. Fantastic. Thank you so much. Hyo-Sung Kwon there, of course, our Bloomberg Economics Korea economist. You can check out that piece, of course, for Bloomberg clients. Just a brief look at markets and where we are right now. So chip stocks in focus, given, of course, the news out of Meta. You have, of course, the usual names coming up on your screens. We're also tossing in SMIC there. 0.6%. Kospi index, just as a backdrop here, is just down 2.5 now. We were down around 6% about an hour back. Have a look at where we are in the Chinex and some of the big movers there within that specific market. Some of the losers there to the downside, of course, and some of the, if not some of the biggest stocks right now. Zhongji Indolite, of course, has really moved on from being just a mid-cap stock. We're down about 3.7 on that. Pharma stocks, we're still trying to ascertain really what's going on here, but as you can see, we are looking at some upside across these names here. We have lots more ahead on the second hour of the China Show. That's coming up next. This is Bloomberg.
We've all looked around and we've seen that prices are too high, and I don't think I'm the only one on this stage that's recommitted to deliver price stability.
I think risks, by the way, that we have to the upside on inflation and to the downside of growth are probably more broadly balanced than they were a few weeks ago as a result of what we're seeing.
It is very frustrating. I was very much of the view that we were going to have inflation back at the 2.0 targets, in the late spring.
There's a lot of uncertainty out there. Those risks could shift quickly. And the other part of our message is, if the situation changes, we're prepared. We're prepared to take action.
The Avengers of central banks around the world meeting in Sintra there, and really talking about maybe some price pressures are moderating a little bit there, as Luet and Lagarde would say, right? The risks seem to be a bit more balanced when it comes to inflation here right now. Certainly in the second hour of the China Show, we're watching very closely what goes on. Hong Kong, of course, coming back from that holiday here. We're half hour into the session. It seems to be looking pretty good. Everyone had a good holiday, it seems. We're up 1.6%. It seems like right now offshore markets are actually doing better than onshore here this morning. Because of what we've been seeing when it comes to the memory side of things here, this meta story that really continues to add a bit of pain here for that trade. So certainly we'll watch very closely. What does this mean in the whole AI cycle now when you have the likes of Meta is going to be competing with the likes of AWS? Google and the whole cloud space, certainly that does lead a lot of questions about competition and really the excess capacity side of things and being able to rent out computing. What signals is that telling us about where we are in this whole bubble story?
Yeah, it's almost like you were investing in real estate and people were saying, hey, don't overspend. You only need one house to live in. You go like, no, like 3 is fine. And then you go,
I'll just rent out one.
I might rent it out in case I might not use it, right? And I think the market is just any early whiff that Yvonne overspent on her real estate ambitions.
Oh,
there
always.
we go. Yeah.
Not real estate, just any kind of spending.
Yeah, that's true. Where people haven't been spending is really in this Hong Kong market, which is coming back from being shut. It's the first trading session of the second half of the year. A recap of the first half was anything but flattering. So outside of Indonesia, Hong Kong markets were the worst performing market globally. On an index level year to date, we are getting a bit of a bounce, of course, on Hang Seng Tech today. It's the opposite when you look at onshore markets. The rest of the region looking like this. The downdraft, of course, on the overlay of the Meta story overnight. We're down 0.4%. Not as bad as about 60 minutes back. So we are coming off lows of the day. Kospi index, we'll get more into this. In fact, we're getting more comments on the South Korean won in a moment here. Currency markets coming up. You have Japanese yen, 162. The South Korean won, of course, and the comments coming out of authorities here that they will immediately take steps to stabilize the won if needed. Not that they have to say that but they obviously see the merit in doing so given where we are at the moment here.
Yeah, I mean, take a look at the yuan. I mean, we're basically at the weakest level since the global financial crisis. So certainly that's one thing to watch here. Whether we do get to that 1,500 handle, or 1,600 handle, I should say, that's certainly the next threshold to watch out for. For more on what traders are watching out for today as well, let's bring in our managing editor for Asia Equities, Lian Ting Tu. She joins us now. The market reaction was quite striking to the Meta news, Lian Ting. Meta surged, but AI stocks in Asia, even the U.S., sold off. What are investors telling us about this divergence?
Yeah, I mean, for Meta, it's a very straightforward story, right? It's a great opportunity for the company to justify the hundreds of billions of dollars in AI capex. And it's a great revenue source as well. But for the rest of AI infrastructure and chip names, Meta obviously is emerging as a competitor for the likes of AWS and Google, as you mentioned. But for chip names, market initially took it as a signal that, AI computing demand may be slowing, just because a very huge hyperscaler is willing to potentially rent out its own computing capacity. That is also a reflection overall for this very crowded and leverage-driven rally that we saw in the chip stocks in both Asia and the US, right? Because they've done so well, so any kind of remotely negative news suggesting a slowdown in hyperscaler AI spending would really have very exaggerated movements, as we saw this morning in Korea. And just wanted to note that it is a lot of investors and analysts that we spoke to actually signaled that it's actually oversold right now. The market reaction is overdone because there is no concrete evidence that the AI bottleneck in the build-out is easing, I should say.
So, it's a new quarter, it's a new half. Obviously, the turn of the calendar makes people think that, okay, what are some of the rotation trades? Before we talk about that, I want to play out something that our guest, Eva Lee from UBS, said earlier on. Then we'll talk about this rotation because she says, given what we saw overnight in the U.S., does make you think where that money should be headed. Let's split it out, guys.
Last night, when I look at some of the U.S. hyperscaler, we start to see the money coming back to the Max 6, right? So I don't know whether that will also help to push people revisit some of these leading hyperscaler listed in H. So that might help to narrow, it's not narrowing the gap, at least lifting some of these top China hyperscaler to do better. Because at the moment, they're very depressed in terms of valuation.
Yeah.
I mean, so with that in mind, this massive divergence in markets, Yvonne asked a question on convergence. Where are we seeing investors rotate into?
Yeah, I think, your guest made a very good point. It's really about valuation, again, for the Hong Kong listed internet names that have suffered huge sell-off in the last 2 quarters. So, give you one example. Tencent's forward PE ratio has dropped to 11 times. That's a record low that we have seen since the stock got listed many years ago. So it's an interesting debate right now about value trap versus value opportunities when it comes to Hong Kong stocks, and today's performance in HS Tech and HSCEI really shows you that there is a little bit of love going in there. And other markets as well. For example, Malaysia is emerging as a second-tier AI play, but because it's under-owned and it's less talked about, people now think, because other AI markets like Taiwan and Korea got really crowded, and Malaysia, because of its AI data center business and a lot of electronics companies listed there, that's a market that's worth another look, right? It's very under-owned and reasonably valued. And even India, because of a slow in oil surge, and that market is considered sort of, relatively well priced. And also a pause in rupee's decline, I should say, is also giving investors some confidence. And India's Nifty actually outperformed the EM benchmark last month. And even Indonesia, which you guys mentioned as a worst market, worst performing market this year in the world, seeing some buying. We've got a few investors saying that they're actually adding some positions because they think the worst news has been priced in.
Lianting, thank you. Lianting Tu, our managing editor for Asian equities. That takes us into really what's coming up. It's Jobs Day ahead of Independence Day. Those are going to be topics of conversation. And if anything helps, of course, this U.S. entering, of course, the round of 16 at the World Cup. It looks like they are going to go through 2-0 currently with just a couple of minutes left here. But yes, lots to talk about ahead of Jobs Day and really what this might actually do in as far as the moving the Fed needle is concerned, Yvonne. I mean, we've talked about this. The estimates are on your screens. We're coming off, of course, quite a bumper May. And the comments coming through out of Bloomberg Economics they actually think this might actually look better than what the street.
It's interesting you mentioned the World Cup because
you picked up on that.
Yes, you see what I got there. I love that you're back. Synergy. All right. Basically, they mentioned hiring actually would be strong. In leisure and hospitality, boosted by the World Cup. So it looks like this, the job gains could be coming at a pretty robust pace for June, and that might solidify some more of these rate hike bets, right? We've been talking about even July might be live now. I'm not live, but I mean, the chances, and what traders are really pricing in, I think it's around 20 to 30% now. Of a chance of a Fed rate hike. I think not too long ago that was 0%, right? So you're starting to see more of these adjustments going on here as we count down to that big print.
Yeah, I think you were mentioning these earlier too. Citadel thinks that was very underpriced.
Yeah.
And we're going into the July meeting. Not that it's a base case for most people, but we might be sleeping on a hawkish tilt. But of course, against the backdrop of what Kevin Warsh said overnight, his guidance on inflation, if that is guidance, of course, but their commitment to price stability. David Savage is with us out of our MLive team, of course, against the backdrop of this, the 2-day look at the U.S. dollar here. And what was your takeaway from Kevin Warsh overnight?
I think it's really interesting because his whole thesis has been we shouldn't be, dissecting every single word he says, but that's what the market's been conditioned to do for so long. So it's hard not to, right? I do think the market it took away probably a little bit of a dovish hint that he at least acknowledged that we have seen inflation expectations come down lower. And that's really a reflection of the collapse in commodity prices, namely oil prices here in June. So if you look at break-evens, they're lower than they were pre-conflict. 2-year break-evens are under 2%. And again, that's reflecting the collapse in commodity prices. But it's relevant because if you look at what was being discussed in April and May, the concern was, well, if we see oil prices sustained at this level, does that creep into inflation expectations and embed inflation longer term? That risk, at least for the near term, seems to be off the table. And so where does the Fed sort of take that calculation into account? We've seen really a turn here in terms of a hawkish tilt. Do we start to see that kind of start to get priced out? So I think that's where this jobs data is really, really crucial because I think there's really high expectations for it. The market's moved a long way. Obviously, a really strong print is going to probably start to get that even July, expectations even a bit higher. But I think the risks are probably more on the other side, that if you did see a soft print, does that really start to say people reassess where those expectations are?
If we see some sort of recalibration where dollar eases up a little bit, I mean, is there going to be relief for the yen, for example, given the week that we've had? And you've been talking about the won in particular, too.
Yeah. So I think, first on the yen, it's interesting. I think traders have been willing to push dollar yen higher and higher. And I think that's partly because it's not necessarily a yen weakness story as much as a dollar strength story. So if you look in the last month, the yen's actually outperformed most G10 currencies. And so that's where I think traders are pretty comfortable sort of edging dollar yen higher and higher. And that's why the volatility on the pair has been very, very low. So I think the inverse is true as well. If you do see a period of dollar sort of cooling off, I don't think that necessarily is going to correspond with a period of real yen strength. And then on the Korean won, I think it's more of a story where we've written quite a bit that there's reasons to think that the Korean won could rebound. But really, it's been a story of foreign equity outflows have just really been significant. I think we're up around 97 billion year to date. It's really started to accelerate in the last couple of sessions. I think 9 consecutive days of outflows from Kospi stocks. So part of that could be rebalancing. And so if we start to see that sort of stabilize a bit, that does provide a period where you could start to see a rebound in the Korean won.
David Savage, thank you so much. Our MLive strategist here on his take on where markets are currently. Just ahead here in shows, we're joined by Citi, the head of banking for Japan, North Asia. Oz gives us an update on the business, what they're seeing across where their clients are, sentiment is like, what they're doing to help their clients. Marc Luet joins us exclusively in a couple of minutes. This is The China Show.
Well, we've been tracking, of course, what's been going on in China and really the business activity. And really, we just came off of the Liu Zhaozui forum there. Yeah. So certainly there's a lot talking about opening up, the financial sector in some ways. So certainly that's one thing that we're tracking very closely. Citi is saying that its clients are more focused on China than ever as mainland companies go global. Joining us exclusively now is Citi's head of Japan, Asia, North, and Australia banking, Marc Luet. Marc, it's great to have you here on the China Show. You just came back from Liu Zhaozui. I was wondering, what was the sentiment on the ground when you were there?
It was good. I mean, there was different messages, I think. Yeah. And one I'm sure we'll talk about a little bit, which is on the crackdown of cross-border account opening. But the main message I took from Liu Zhaozui, and it's the third year I go there, is about this continuous opening up of financial market remains a policy agenda. Yeah. And one could say it's gradual, but it's, I think, well managed. And every year you get a sense that they're going into the next stage. And that's what the speakers at the forum were talking about.
And tangibly, as a foreign financial institution there, what would you like to see over the next few years, ideally?
I think it's all about, making sure that the trend on China assets continues. So I think investors want to hold China assets. We see the role of the RMB continuing to increase in global trade. Yep. And a lot of the goods trade out of China now is billed in RMB. It's about 33%, which is 3 times what it was 6 years ago. But for that, you need for the RMB to be a currency not only of trade but of investment, you need more China government bonds. And for that, you need hedging instruments. So we're going to see a lot of measures that are, put in place, this year and I think gradually over the next couple of years. So we take a lot of comfort about the direction. And that reinforces, by the way, the role of Hong Kong as an international financial center.
You mentioned about cross-border curbs. Obviously, there's been a lot of concerns about what this could mean for the IPO market here, the wealth businesses. What do you see as the potential sort of impact it could have?
Okay, if I can be a personal opinion, it's been overblown in terms of impact. This is an enforcement action, right? Trying to make sure that the proper channels of investment cross-border are being used and used correctly. There was a lot in Liu Zhaozui. There were a lot of speakers commenting about this action, so there was clearly a message. But they were couching it in terms of this is just closing these loopholes, right? It's not a sort of foreign investment restriction policy measure. It is an enforcement action. And I think we need to put it in that box. I would tell you that from a Citi perspective, we haven't seen, just because of our standards, if anything, we've seen more people coming to us, right, for opening these accounts cross-border. So I think, it's been overblown a bit, would be my opinion.
Has it changed in any way the way you guys operate and service your clients from Hong Kong?
No.
Okay.
It hasn't. And that's a reflection of the standards, we put into this. And I think a lot of the quality players in the market will have seen very little impact in terms of process.
Tell us what the business plans are for China. I believe you've been applying for a securities license for some time now. Can you give us an update? Have you gotten any sort of approval yet?
We are very hopeful. We're going to get it very soon. The signs are that we are indeed, there were reports we already gotten it. That was a little premature, but I think we are close to obtaining the license. And I think this is in the broader context of what we do in China. People probably don't know, but China is the second largest institutional franchise we have outside of the US. We've been in China for 125 years. So this, and I know we're very driven by market events day to day, But our plan and the case for China for us is a very long-term plan, right? And so we're going to continue to invest. The license is one step in the investments we're making. We have a very, very tight strategy that Jane Fraser, our CEO, has implemented around the globe, and it applies to China. And I would say China is a perfect example of the role we play in connecting the world to a specific geography and vice versa. The globalization of national champions in China has meant that our China franchise has grown, very, very strongly over the past few years.
They need, when I say they, Chinese multinationals going abroad need capital to do that. How much have you guys helped them raise recently, and do you think that amount goes up even further as that endeavor continues?
Yeah, so we've raised about, I think, $40 billion for our Chinese clients last year, judging by what we've done so far. And, I think 2026 will turn out to be even a bigger year. And we see these increased needs, for financing. But it's not only financing, right? What the Chinese, the clients that are going global need from us is this intersection of cash management, FX capabilities. We're both number one in these areas, all the way down to financing structures and possibly for financial institutions, all the way down to the custody services that we provide, where we're also number one. So this integration of the product set, this is what we offer, and it plays particularly well in the context of China.
Yeah. You also oversee North Asia. I'm just wondering, there's so much going on when it comes to AI and the wealth effect that it has had on markets like Taiwan and Korea right now. What are you most excited about, really?
Yeah, we're very excited by, like everybody else in the market, we're very excited by what's happening in Taiwan and Korea. Also because the relationship we have with clients in those two geographies are very, very strong. So, we tend to benefit a little bit from what's happening in those markets. I would venture to say that on the investment banking side, for instance, there's a lot of activity going on in those two geographies. Traditionally, you see the wallet in Japan, or China, and Australia, from an IB fees wallet standpoint.
Yeah.
But Korea and Taiwan are very, very strong. And again, it's the same theme. The global relevance of the industrial know-how of these countries, or technology know-how, it matters to the world now much more than before. And that's a theme across this region. China is relevant, we know that, multiple verticals. But if you think Korea, there's a lot of talk around AI, but they're relevant in defense, they're relevant in shipbuilding. Just the same way that Japan is relevant in power, know-how. Now, these themes, they're not the day-to-day market volatility that we see.
Right.
But they are the trends that are going to carry this region for many years.
I'm not trying to get a headline out of you. I mean, certainly the difference between the conversation in markets and, are we in an AI capex bubble, and what you're seeing on the ground in those markets, how would you characterize and describe the appetite from corporates there? Are we anywhere near, to borrow, I guess, a phrase from the late Alan Greenspan, irrational exuberance as far as AI goes, or do things make more sense still to you?
My personal view is we're not in the irrational exuberance space. And we're going to see, I would see the trend that we're seeing today continue for another couple of years, right? If you step back a little bit on what's happening, and down the line, will there be winners and losers? And just the example of the railroads when they were built in the U.S. comes to mind. Of course, you're going to have these situations. But if you look at all the books, if you look at the need for, it's not only the AI itself, but everything that sort of sustains it, including power, you see this need for investment that will run over the next, at least the next 2 or 3 years. So we see that continue.
Citi seems to be on the syndicate for this SK Hynix ADR listing in the U.S. Can you tell a little bit more about what sort of demand that you're seeing?
I won't comment.
Okay.
Obviously, it's public knowledge that we're, helping, but But again, that's an interesting thing that's happening in the sense that it might provide actually a bit more liquidity around the stock, and we know what some of the issues are, at the moment. So, but it's another sign of how Korea Inc. Is looking at significant investments, global investments, and the funding that's associated. So, again, it's another sign that this part of the world is very vibrant, very vibrant.
Too vibrant, given your manpower footprint?
That's a good question.
Yes, that's me trying to ask, are you going to hire more in a delicate way?
That's a good question. I think a couple of thoughts come to mind, that talent is key. And in this region, you need to fight for the right talent. I'm happy to say that we're able to attract the people we want to attract. We're not, confronted with an issue there. I also think that, we're able to invest where we want to invest. So, it's clear Viz Raghavan, our head of global banking, has made the point recently at Investor Day around how we want to build a stronger investment banking and compete with the top three. And we're able to attract the talent in Asia as well on that front. So with a context of automation and the technology we have at our disposal, I think, it works, right? And we're able to do much more with the teams that we have.
Marc, fantastic. Thank you so much.
Thank you very much.
We barely scratched the surface. Let's do this again soon.
Thank
I know
you.
you're a busy man, so thank you for taking part of your time for us.
Thank
here.
you.
Marc Luet there, guys, head of Japan, Asia North, and Oz, and banking there at Citi. Right, before we go into the break, just very quickly, a market check right now, and a couple of things. There we go, 18% Chevron holdings there. Very, very quickly, car makers, you have Korea Financials, Asia Chips, all coming up very, very quickly on your screen. To start things with car makers there on your screens, EVs, of course, and the BYD story set to overtake Tesla. Korea Financials coming up as well. And certainly the story there is against the backdrop of what's taking place in the Korean markets and the pullback we're seeing there. Yes, we are getting maybe this pivot to financials there in Korea.
Rotation. Yeah, and why? Well, take a look at what the chips are doing across this region here right now. Still seeing Samsung down some 5%, Hua Hong Semi down close to 8% losses in China. So certainly one thing to watch there. Here, the chips continue to get hammered. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to lunch break in just a moment there. Yeah, we are taking a bit of a breather in this rally here this morning thanks to what happened with Meta and the news there. That is sort of roiling some of these tech plays here. Topics, though, is still looking pretty strong. We're up about 0.8% there. But yeah, 162.53 for dollar yen. You're hearing the likes of TD Securities a lot on really these analysts saying Japan is running out of options to support the yen. Worst case scenarios are being mapped out that even get to 200 if they don't do anything. 272 when it comes to your JGB yields here, so we are up about 1 basis points there today. Yeah, well, our yen earner colleague Sharian still doesn't get out of it. Even if it gets to 200, she still owes us a beer. So I mean, I'll pay for the tip, Sherry, but the beer's on you if and when. Now, speaking of, okay, let's talk about this Japan more. So you have the Prime Minister, Sanai Takaichi, has arrived in India. It's a 3-day trip, including a summit with Narendra Modi as the two countries try to reduce their dependence on China. Let's bring in Brian Fowler. Brian Fowler, our senior editor, joining us from Tokyo right now to give us put this trip into context. We can talk about the agenda items in a moment, but why is this meeting so important at this point in time, Brian?
Yeah, well, David, this is, first of all, this is Takaichi's first official visit to India since becoming Prime Minister last October. And I would expect a very warm conversation between those two leaders, given the geopolitical risks and economic risks in the background that are pushing these two countries closer together. We expect to see collaboration and agreements on a wide level of dimensions. So we'll see, I think, critical minerals will be a deal on that as the two countries seek to mitigate economic security risks. We will also probably see them aligning on various diplomatic issues. And then on the corporate side, we expect to see more than 100 deals from Japanese companies with their counterparts that may be worth as much as $12.3 billion. Just for perspective on that, a year ago, Japan pledged to encourage its companies to invest about $61 billion in India over a 10-year time span. So if indeed we see more than $12 billion of deals done today, that would be twice the pace that was laid out a year ago, and it would show that the cooperation is gaining momentum.
Yeah, you mentioned economic security. Certainly, one thing that we've been tracking, of course, is Tokyo's relationship with Beijing, which has gotten much frostier, right? This pressure campaign that China has had on Japan has continued for months now. How much of that is really kind of pushing Japan and India maybe to really kind of reevaluate their relationship a bit and pushing them a little bit closer?
Yeah, Yvonne, that's a huge factor. That dispute goes all the way back to November last year when Takaichi made the remarks about Taiwan, and it continues to fester. So we've seen China, of course, take steps just recently to tighten access to various rare earths and other critical minerals. So that means Japan has to look elsewhere for its supplies. So that'll be a big topic of discussion when Takaichi meets Modi. It's not just rare earths and critical minerals. It's, I think, really all aspects of the supply chain. So, India being very much on the upswing in terms of development creates lots of opportunities for Japan's companies across the spectrum, including chip makers.
Brian Fowler, thank you, our senior editor, joining us out of Tokyo there as we look forward to, of course, the meeting of Takaichi and Modi. Coming up, how an SK Hynix-linked ETF is now so big, it's moving the chipmaker stock rather than just tracking it. We have more in today's Big Take next. This is Bloomberg. All right, some corporate news this morning. Alibaba and its U.S. digital payment processor have agreed to pay $600 million to resolve a federal investigation into the sale of illegal pharmaceuticals and controlled substances. The investigation found that overseas customers use Alibaba platforms to buy the products. The Chinese company says the settlement will bring stricter compliance to U.S. sales by third-party merchants. BYD is set to reclaim the title of the world's top seller of fully electric cars from Tesla. The Chinese automaker delivered more than 557,000 battery electric models in the 3 months through June, while analysts expect Tesla to report quarterly sales of around 397,000. BYD's results were helped by growing overseas sales amid softness in its home market. Yeah, I see the shares now surging some 9% there. Meta shares closed higher after sources told Bloomberg it's developing plans for a cloud infrastructure business that will sell access to AI computing power and models. One potential plan is said to include selling access to AI models hosted on Meta's existing AI infrastructure. Such a move would position the company to compete with industry leaders such as Amazon Web Services and Microsoft Azure.
Yeah, well, I mean, Meta was the one that closed higher, and of course, some of its peers obviously did fare too well, and I think we're feeling that latter here in the Asia Pacific today. I mean, to one extent, I think you can't ignore Hong Kong. That's a catch-up trade, of course, but we are up, just to mention that, up about 1% as we go into the first session of the second half. The rest of the region, as you can see, is feeling the pinch. Cost in particular, down 6 earlier on. We're just down 3%. For more really on what we're seeing across these markets, specifically the sell-off we're seeing across the chip space and the nuance in between there, Anthony is here with us to take us through what's catching your eye at this point of the trading session.
Yeah, look, this meta news has to be passed by the market, right? In terms of what does the go-forward spend on AI infrastructure look like if their infrastructure is coming on the market in rented form. And that's what's getting priced in the Chinext actually very aggressively. The Chinext was the part of the Chinese ecosystem that was outperforming massively. All these optical names, server names, and they're getting hit now because maybe you'll be able to rent Meta's infrastructure. So you don't have to build your own, right? In Korea, you have the memory trade pull back very materially because they are exposed to this AI build-out, but also Apple is asking for Chinese memory. So they have a bit of a 1-2. Actually, it's interesting to mention in the Kospi today, you have losses that are really limited by a huge bounce in the banking sector. The banks are up around a 9%, 8 to 9%, which is quite extraordinary. And that's on the back of pretty decently high Korean inflation that kind of presage a possible BOK rate hike coming. So some of the sector rotation is also interesting, right? In our region, you have the semis and the tech trade, which has been a huge part of the first half, pull back, and now people are looking about what to buy in the second half. And it really does look like Hong Kong may be one of those places. You're seeing Meituan, for example, have a huge pop to start the second half on the back of them launching a new AI model. And that is crushing some of its competitors like Jupu and Minimax.
Yeah, tell us a bit about that, the Meituan sort of story.
So what's interesting about Meituan is they claim that this model has been trained on domestic chips. That's the first out there thing. The second thing is that their context window, i.e. how many tokens this model can process, is very high. It's actually a frontier model by that respect, right? And that is what is challenging the Jupu Minimax. Now they have a new competitor that is, a very big tech company, right? And Meituan has been struggling with this grocery price war for so long. The fact that they be able to launch such a complicated model while going through that is quite impressive, and the market is rewarding them for that today.
Anthony, thank you. Anthony Stevens there, a Bloomberg Markets reporter, on the latest on all things China tech. We got to talk about Korea now. The Kospi is the world's best performing index this year, really been powered by an AI boom that's backed chip makers such as Samsung and SK Hynix, right? You talk about those year-to-date gains of 91%. And really, a lot of it has to do with what we've been seeing in this whole retail leveraged ETF sort of sector, right? This leveraged ETF tied to SK Hynix has grown so large and so fast that analysts say it magnifies swings in both the stock and the Kospi. This is the CSOP one that we're talking about here. But Bloomberg Intelligence says this exchange-traded product falls short of expectations. They also call this or ETP, as they say. Take a look at this chart showing the divergence of the ETP from its theoretical 2 times benchmark, which has been actually widening in recent months.
Yeah, you got to wonder whether it's gotten too big for its own good. It's kind of defeating part of the purpose and becoming maybe counterproductive. Maybe, of course, for the initial purpose of some investors here. Certainly on paper, it works, but it's certainly better in theory at this point in time, looking at the gaps we're seeing here. To take us through this, the focus, in fact, Yvonne's point of today's big take is really on this, and Balazs Pence is with us right now. To help us understand, what is the thesis here that we're looking at in today's big take?
It's really a remarkable story. So we're talking about this ETF issued by CSOP here in Hong Kong, which has a very simple promise. They will deliver 2 times the return of the SK Hynix stock every single day to investors. And so far, that has been an amazing trade, as SK Hynix has been one of the best performing stocks anywhere in the world. But that also means that this ETF itself has grown so large, it's around $13 billion now, that it's itself affecting the underlying stock's price. This is what our research has found, because every single day the ETF needs to reset, which means when the stock goes up, it needs to go buy more. When the stock falls, it needs to sell more. So it is amplifying all those moves. And not just that, but obviously a lot of investors have figured this out. So we have talked to people who structure their day around trading when this rebalancing happens. They know they can expect what happens with the stock already in that closing part of the Korean session. And what's more, Hynix accounts for about 30% of the Kospi. So its moves affect the Kospi's moves, and the Kospi has become the global barometer for the AI trade. So when the Kospi falls, as we saw last week, the entire world, the entire tech industry around the globe can fall. So this one product that launched here in Hong Kong in October has become a crucial component of what happens in the global AI trade.
What does that tell you about, the system of all of this here, right? The banks and what they have to deal with to just even manage, the flows that they're talking about when it comes to some of these, leveraged ETFs. Is it just getting more expensive to kind of manage it now, the risks?
Yes, our reporting shows that there's a vast structure, a vast ecosystem of banks. There are more than 20 counterparties involved in this product just to keep it running. And the way this works is the ETFs rely on the banks to buy the stocks, whether it's in physical form or in options or in futures contracts. But the banks themselves then have to spread that risk. They have to hedge. So they're in contact with hedge funds, with asset managers, with market makers who help create that leverage and help spread that risk. Yeah. And what we have seen is that there are strains showing up along that entire food chain, that entire plumbing behind this ETF. We have seen the cost of the hedging rise. We have seen some of the banks running up against their capital buffers in Korea when it comes to warehousing this stock. So there are strains showing up all around the food chain.
You got to wonder whether this is happening because it's just an extreme scenario. In other words, the stress testing just falls in the tail risk of that. And I wonder, does this have any lessons for us in terms of future products or product structuring, that sort of thing? Or should we just treat this because it's such an extreme scenario?
It is extreme because Hynix is a relatively small stock, a relatively small number of stocks available, and the size of this ETF compared to the stock itself is huge. Right. That's unusual. But these ETF products, these leveraged ETF, single stock leveraged ETF products have become very, very popular, and they have done very well, as we've seen in this case. So obviously, investors want to buy them, but this is one example of how that can distort trading itself and how that can put strains on the entire financial system.
Yeah, quite the phenomenon. All right, Balazs, thank you. Balazs Pensdar joining us there with our Big Take here this morning. Feel free to give it a read. Subscribers can check it out in today's Big Take on the terminal right now or at Bloomberg.com. We got plenty more to come. This is Bloomberg. Well, Taiwanese prosecutors have detained two Supermicro computer employees over alleged shipments of NVIDIA chips to China. Now, that follows Monday's raids on the U.S. company's local offices. Let's get the latest now from our economy and government reporter, Yan Li. He joins us from our Taipei bureau. So, Yan, what more do we know at this point?
District Court in Taiwan has agreed to detain 6 people, including 2 employees working at Supermicro's Taiwan office. And this is part of an ongoing investigation on an alleged smuggling of AI servers containing NVIDIA chips to China via third places such as Japan, as Bloomberg has reported. This investigation comes after the U.S. prosecutors charged 3 people with connections to Supermicro, including one of its co-founder, in violation of export controls. So far, it's still unclear whether the case in Taiwan is directly linked to the one in the U.S. And Supermicro in Taiwan has said that the company itself is not the target of the investigation, and that it has been cooperating with Taiwan's authority for months, and also he has already placed the affected employees under administrative leave.
Let's talk about timing. Why is Taiwan taking action now?
That's a good question. So the case comes amid intensifying competition on AI developments between the U.S. and China. So the U.S. has tightened its export control regimes on AI chip and AI-related techs with a primary goal to limit China's ability to advance or develop its defense or AI capabilities. So as a de facto ally of the U.S. and as a primary a manufacturing hub of AI-related hardwares, Taiwan has been under pressure by the U.S. to also strengthen its export control regimes. President Lai Ching-te has already said that his government would adjust its regulation and to deal with the illegal transshipments when his government was dealing with the U.S. on the trade tariff last year. And I think it's worth mentioning here that Taiwan currently does not treat export of AI chips to China as a crime. So the government has been relying on some local regulations or laws to charge such illicit trades. But the Bloomberg has reported that the government is now considering criminalizing the, such kind of trades to China.
Yeah, it's interesting, this move. It seems like Taiwan is aligning itself more with the U.S. in some ways. What could be sort of the broader geopolitical implications then, especially in terms of U.S., China, and Taiwan relations?
Yeah, I think this case shows or highlights, Taiwan's delicate positions in, this bilateral relations with the world's two superpower. China views Taiwan as part of its territory and has vowed to unify with the islands with force if necessary. So I think Taiwan's recent efforts to crack down exports of chips to China is almost definitely going to anger Beijing. But on the other hand, the efforts could also help Taiwan placate President Donald Trump, who has been, cast some doubt on, the U.S. commitment to defending Taiwan against a potential Chinese invasion, and also, Trump has already reportedly delayed some of its arms sales to Taiwan recently. So I think this is going to help Taiwan on the negotiation table with China.
Thank you. Yan Li there, our economy and government reporter joining us out of Taipei this morning. We're talking a little bit more about car makers now. Nissan CEO says Chinese car makers are setting many of the industry's future standards with their technological advances. Ivan Espinosa also told Bloomberg that despite the weak yen making Japanese-built vehicles cheaper, Nissan remains committed to producing vehicles in the U.S.
We will continue the strategy that we have set in the U.S., which is building cars in the U.S. We have two very large manufacturing sites, one in Smyrna, Tennessee, the other in Canton, Mississippi. And we will continue doing that. So to give you some numbers, last year, January, around 45% of our product mix was built in the U.S. The rest was imported from either Japan or Mexico. And we closed the year with 60% of our product mix being built in the U.S. And we will continue doing that because it makes sense. With the current context in which we're living, it does make sense to continue investing in the U.S. and continue bringing more cars into North America.
Given the current tariff environment, I believe for every auto produced in Mexico, it's about $2,000 or $3,000 more. What are you doing with that? How much is being passed on to the consumer? And how much are you just absorbing?
Well, we have a very aggressive cost reduction program, which we started a year ago when I took over the company. And we are focusing a lot on the products that are built in Mexico because they are cost competitive, but it's true, they are currently tariffed 25%, which is it's making part of the lineup that we're bringing from Mexico difficult to sell. So we have a very strong cost reduction program on those vehicles because we do see an opportunity. Looking at the pressure that the U.S. market has today in terms of affordability, we see that potentially some of the buyers could be moving into these type of vehicles. So we are working very strongly on making them more competitive so we can probably take advantage of that if you can.
Yvonne, can we wrap it up by talking about China?
Sure.
How difficult is it to compete with Chinese auto manufacturers?
Well, China is a world of its own, I would say. It's a very unique ecosystem.
What makes it unique?
I think the technology, speed, costs, they're moving at a very different speed than the rest of the world. And for me, it's important to remain present in China because I believe a lot of the future standards of the industry are being set by some of the Chinese players today. Again, in terms of speed, in terms of costs, and in terms of technology. So for me, the role of China is twofold. One is, of course, continuing to produce and sell cars in China because we have over 15 million users of Nissan products in that country. So we owe them product that is competitive and that is attractive for them. But at the same time, it's a place where you can learn a lot and you can start exporting some of the methods, some of the processes and new ways of working that we have discovered.
Can you give us an example? What can we learn from what they've done? An industry right now that they seem to be dominating.
Well, one of the things is when you look at the products in China today, almost 80% of the products that are offered have autonomous technology embedded. And customers are now not considering to buy a car if you don't offer some level of autonomous technology. So this is just an example of what can happen and what we can imagine coming out from this unique ecosystem that they have.
There we go. The Nissan CEO there speaking, of course, with the Bloomberg Surveillance Crew. Fantastic interview. You can check that out, of course. A lot of platforms across the Bloomberg universe. Right, top sports, Anta leaning, and some of the big names within the sportswear sector. We're tracking Anta Sports specifically there. Well, you have Citi, of course, looking at upside there. If you recall some of the headwinds, I think 24 hours back of Nike talking about how this reset, I believe, in China and how that's become a challenge for them and perhaps an opportunity for others.
I guess the China commitment side of things and the commentary from the CEO is helping, I guess. They're saying maybe lift some of these stocks here, but certainly Anta is certainly one thing we're watching closely here, given really the competition that they're seeing with some of these local domestic brands, right? We're checking gold stocks in particular here today. I mean, just given the dollar moves that we've seen, and really it seems like we're seeing the gold price come back a bit above that 4,000 level here. We're at 40.57 levels. And Zijin Mining, you're seeing Shandong Gold and Jiaojing Mining is actually seeing gains there. And Hang Seng, we're talking about the top gainers. It's the mega cap tech. Surprisingly, take a look at what we're seeing here with BYD after those June delivery numbers. Certainly, we're looking pretty good. Tencent, Alibaba, and Xiaomi also rising here. That's it for us here on the China Show.